Have you ever wondered if there's a secret financial strategy that can safeguard your savings, offer tax advantages, and potentially make your money grow based on market performance without exposing you to market risk? It sounds like a financial fairy tale, right? Well, in this video, we're about to unveil the magic behind an indexed annuity, a game changer for those on the brink of retirement. By the end of this video, you'll have a clear understanding of what an indexed annuity is and how it works. We'll explore its revolutionary advantages and why it's a compelling alternative to traditional bonds. So grab a seat, relax, and let's dive into this financial fast lane journey. The evolution of indexed annuities. Let's step into the time machine and take a journey through the evolution of indexed annuities, or what we'll casually call IAs from here on. These financial instruments have come a long way. Back in the 20th century, they were practically non-existent. The first IA appeared on the scene in 1995, but it took a while for them to gain popularity. By the early 2000s, the number of companies offering IAs had surged from 1 to 50. So, what's changed since those early days? Quite a bit, actually. IAs have become more flexible and sophisticated. They've honed their indexing strategies to maximize market performance. Initially, the upside potential was somewhat limited, but today, we have uncapped index strategies that offer remarkable growth potential. For instance, there's an index created by a prominent professor, let's call him Professor Market Master, who has revolutionized investment thinking, particularly for those approaching retirement. The game changer here is that with these new age IAs, you have the opportunity to benefit from market growth without fearing market downturns. It's like having your cake and eating it too. When our fictional global market indicator goes up, your IA enjoys the ride and takes advantage of the market's positive performance. But if it takes a nosedive or experiences a downturn, you won't lose a single cent due to market losses. This is a game changer, especially for those who fear the dreaded negative sequence of returns in retirement. What's fascinating is that these IAs are designed to balance risk and reward. While you may not capture 100% of the market's upside, you also shield yourself from its downside. This means you won't find yourself in the common predicament of waiting for your investments to bounce back after a market downturn. For anyone nearing retirement, having a chunk of your savings protected from market losses becomes a crucial part of your financial strategy. So, in essence, IAs have evolved into a powerful tool that offers both safety and potential for growth. They've moved from being an obscure financial product to something that can be a cornerstone of your retirement planning. As we delve further into the world of indexed annuities, you'll discover how these financial instruments have the potential to revolutionize the way you secure your financial future. It's not just about protecting your nest egg anymore, it's about letting it grow and thrive. The power of market-linked returns. Picture this: an investment that connects to the heartbeat of the market. If the market surges, your investment thrives. If it stumbles, you remain unscathed. That's the magic of indexed annuities, and in this section, we'll delve deeper into how they harness the power of market-linked returns. Let's break it down step by step. The secret sauce behind indexed annuities is their connection to market indices. We're going to use a fictional global market indicator as our benchmark for simplicity. When this indicator takes an upward journey, your indexed annuity enjoys the ride, capturing the upside growth. It's like having a front row seat at the stock market's success story. But, and here's the remarkable part, when the market faces a hiccup or dives into a temporary abyss, your indexed annuity remains your steadfast financial companion. It won't suffer losses due to market downturns. So, while you might not enjoy every bit of the stock market's gains, you also won't bear the brunt of its losses. Imagine not having to anxiously wait for your investments to recover after a market crash. That's the kind of peace of mind indexed annuities bring. Now, you might wonder how this all works. The secret lies in the way indexed annuities use options on a large scale. When the market shines, they can exercise these options and share the gains with you. It's like having a seasoned financial expert managing your investments in a conservative and safe environment. So, indexed annuities are your ticket to a win-win scenario. They let you participate in market growth without the fear of market losses. In an ever-changing financial landscape, Having such a tool in your arsenal can be a game changer, especially if you're on the cusp of retirement. It's a brilliant way to ensure that your financial journey remains smooth and your savings keep growing, even when the market decides to be a bit unpredictable. If you like our video so far, don't forget to hit like and subscribe. A new alternative to bonds. Bonds, the age-old investment choice for those who love stability and predictability, are not what they used to be. In this era of low yields and lurking inflation, they've lost some of their charm. Here, we'll explore why indexed annuities have emerged as a worthy alternative to traditional bonds. Let's set the stage with a clear picture. For over 30 years, bonds were the go-to option for conservative investors. They were the trusted guardians of your wealth. But, and it's a big but, times have changed. In today's landscape of low-yield bonds and the lurking specter of inflation, bonds are no longer the knights in shining armor they used to be. To highlight this shift, let's compare the returns of our fictional global market indicator with those of traditional bonds over a 15-year period. We'll start in the early 2000s, a time of market turbulence. If you had invested $100,000 in the global market indicator with a 10% cap, your investment would have outperformed traditional bonds by a significant margin. Bonds during this period were struggling, while the global market indicator was showing its mettle. The point here is that indexed annuities have become an attractive alternative to bonds. They offer an opportunity for growth while still providing a measure of safety. Instead of putting your conservative investments into traditional bonds that may struggle in an inflationary environment, you can allocate them to a fixed indexed annuity tied to a market indicator like our global market indicator. The beauty of this alternative is that it provides a safe yet growth-oriented option in a world where traditional bonds are no longer the reliable choice they once were. It's all about finding a new path to financial security, one that adapts to the ever-changing economic landscape. In the next section, we'll explore the real dynamics between indexed annuities and the stock market, revealing how they aren't competitors, but rather a unique solution in a world of financial choices. Indexed annuities versus the market. Let's clarify something right off the bat. Indexed annuities, IAs, and the stock market aren't rivals. They're not competing for the same crown. Their roles in your financial strategy are distinct. Instead, the real competition is between IAs and traditional bonds. In this section, we'll dissect why IAs are the modern-day alternative to bonds and how they stack up. Think of indexed annuities as a new player in the financial game. They've evolved into a reliable choice, especially when compared to traditional bonds. Bonds were once the go-to for conservative investors, but with low yields and looming inflation, they're not the rock-solid choice they used to be. The beauty of IAs is that they strike a balance between risk and reward. You won't capture 100% of the market's upside, but you also won't endure its painful downturns. This means you won't find yourself in the common predicament of waiting for your investments to bounce back after a market downturn. This is especially crucial if you're nearing retirement and can't afford to ride the roller coaster of market volatility. The magic behind indexed annuities lies in their ability to use stock options on a large scale. When the market is up, these options can be exercised, and the gains can be shared with you. It's like having an expert financial manager in your corner, making conservative, safe investment decisions. So, indexed annuities are here to change the game. They're not trying to compete with the stock market. They're offering an alternative to bonds. They provide a way to grow your money based on market performance without the excessive risk. In a world where the financial landscape is constantly evolving, indexed annuities have emerged as a reliable and modern solution to safeguard your wealth and make it thrive. The landscape of annuities. Annuities as a financial product can be a bit confusing. There are various types, and they serve different purposes. In this section, we'll focus on demystifying the world of indexed annuities and how they are designed to work. First things first, it's essential to understand that there are many flavors of annuities. There are variable annuities, fixed annuities, and more. Each type comes with its unique features and trade-offs, making the annuity world a bit of a maze to navigate. In this video, our primary focus is on explaining how indexing works within fixed index annuities. These IAs have evolved into powerful financial tools designed to provide a safe and growth-oriented alternative to traditional bonds. However, there are annuities designed for generating income, which is a whole different ballgame. The essential takeaway is that indexed annuities offer a unique approach to securing your financial future. By providing the safety and potential for growth, they've moved from being a niche financial product to a fundamental part of retirement planning. With the information you've gained from this video, you're now equipped to make more informed financial decisions. Now, as we wrap up our exploration of indexed annuities, remember that these financial instruments continue to evolve, adapt, and offer better options for those who are approaching retirement. The key takeaway is that they are not just about protecting your nest egg. They are also about helping it thrive and grow. Now, whether you're at the threshold of retirement or planning for the distant future, understanding the world of indexed annuities can be a powerful tool in your financial arsenal. So, what's your plan? Well, the choice is yours, and this video is here to help you make it wisely. So, there you have it. The world of indexed annuities is a fascinating one, and it's constantly evolving to provide better options for future retirees. I hope this video has shed some light on how this financial strategy works and why it's worth considering as part of your retirement plan. If you found this video helpful, give it a thumbs up and subscribe for more financial insights. Also, don't forget to drop your thoughts in the comments below. Stay tuned and let's unlock the secrets to getting rich together.